Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's Tuesday, the 12th of September, and we have our guest today, Charu Chanana. She's the market strategist from Saxo Markets, and she's coming to us out of Singapore. Charu, as always, good afternoon and great to have you on the show.
Hi, good afternoon, Brian. Yes, good to be back with you again.
Now, Charu, before we get your insights, we're going to take a look and take a look at the numbers and see how they have all panned out in the first half of the day. We're going to start with cryptocurrencies, though. Bitcoin is at 25,775. Pretty much unchanged, just down 0.01%. Ethereum is at 1,585. It's down 0.67%. Now, looking across the regional stock markets, we will start to where you are at the moment. The Straits Times Index is down 0.2%. Bursa Malaysia, the KLCI, is down 0.18%. Shanghai is down 0.05%. The ASX All Ordinaries is up 0.15%. The Nikkei is up 0.83%. The Hang Seng is down 0.14%. And rounding up the numbers, we've got the Kospi, which is down 0.62%. Charu, your read on market performance in the first half of the day.
Yeah, quite mixed there, Brian. And I do think that we got a little bit of a support from overnight markets, especially with that 10% rally that we got in Tesla yesterday in the US session. That obviously is giving a little bit of a bid, to Chinese EV players as well. I mean, we've seen demand forecast turning higher. So I think that's underpinning the market. And there's this broad story as well around a recovery in China, which is starting to be, getting reflected in the data as well. We saw an exit from deflation over the weekend, and then yesterday we had some good credit data as well, which shows that loans are surging once more. Now, some of it might be seasonal, but certainly shows the impact of all the measures that the authorities have also been taking are probably starting to percolate into the economic numbers. So some shift of sentiment there, but of course, I think a lot of this is also positioning ahead of that very important US CPI release, which markets usually react to. So I think, pretty much of a mixed picture there, really.
Okay, now, speaking of US CPIs, does it really matter so much these days?
Yeah, I mean, you're right to point that out because, of course, the focus has shifted away from, inflation to really the growth side of the story, whether it is for an economy or also on a relative basis towards growth differentials and how soon a central bank in that sense will have to, adopt an easier stance and how aggressive can they be when that cycle turns. So certainly I think the discussions should shift towards that point. But that being said, certainly this week I think CPI is still important because there are a lot of different interpretations that the markets can get out of that CPI. You're looking at a number of different measures. The headline number, there is a consensus around that being higher because of higher gasoline prices, because of a softer base as well. Now, will that spook markets, or will the markets really just focus on the core number, which is so far expected to be still soft? But of course, I mean, there are reasons to believe it could be soft because auto prices, because housing prices are going down as rates are, higher rates are biting. And that does mean that could pull core inflation lower. But particularly for August, there are these one-off items that we have to be aware of. There were a lot of entertainment events, Beyonce, Taylor Swift, and spending on those events obviously could mean that, maybe hospitality costs or hotel accommodation costs, transportation costs could have gone higher. Now, whether that one-time upside pressures could offset the more structural downside pressures that we have in inflation, we don't know. So that's something the markets would be looking to answer with this print. But again, I mean, that being said, I do believe, what you're saying is true, that it does not matter as much what we see in the US CPI this week for at least the September Fed meeting. I think a pause has been more or less locked in for that meeting. And we also got hints from a WSJ reporter, Nick Timiraos, who is supposed to be, or who is considered to be, I should say, a whisperer for the Fed, especially when it is in the blackout period like it is now. And he said that, a pause for September looks likely. And then from there on, the Fed would be really assessing whether they need to hike more or not. So I think the focus again for this CPI is more on whether we get any more rate hikes in November or in December or not. It particularly does not have the ability to move the needle for the September meeting per se.
Okay, now I want to move us closer to Asia now and talk about something that a lot of analysts and investors have been watching, the weakness of the yen over the last few months. Now, what is your view on the yen? Because there is a point of view that says that there are tailwinds that are about to hit the sails of the yen moving forward.
Yeah, I mean, absolutely. So there are two things that the yen traders have been cautious of. One, whether the BOJ will really pivot, and two, whether the Fed will pivot, because that also brings the yield differentials lower, which has been the point of concern for the Japanese yen, right? And while the signals are still weak, it does appear like we are at a turning point, because we've been getting these repeat verbal interventions from Japanese authorities last week, but a stronger intervention, I would say, came from the BOJ governor Ueda himself in an interview over the weekend, where he said that they might be having signals on the wage data, on the inflation data, and whether that is structural or not in the near term. So that does bring forward the timeline of a potential tweak, which, if you would remember, at his very first meeting or so, he had set it to be 18 months. So bringing that forward, the policy normalization expectations for Japan are picking up, even though this is just a step to kind of, stop or try to intervene in the weakness of the Japanese yen. I think this is something we can continue to expect. And the second side of the story certainly being treasury yields, which are also facing key resistance now. And if that Fed story or if the US economy story turns towards a recession, then those treasury yields might also have trouble climbing a lot higher from here. So again, that bodes well for Japanese yen. So I think on both sides the equation is changing, although I do think it's a very slow change, and the traders would continue to test more upside in USD yen for now. But eventually, I think some caution is starting to set in.
Caution starting to set in. I will end on that note. Thank you very much for your insights, Charu. Thanks for coming on the show.
It's always a pleasure, Brian.
I'm Brian Fernandez, and we've been speaking to Charu Chanana, market strategist from Saxo Markets, on BizTech's Asian Midday Market Watch. This interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.